Hello traders and welcome to another video review. Today is Wednesday, October 4th, 2023. Let's find out what's going on the Forex economic calendar today. Reserve Bank of the New Zealand has made the decision about the interest rate, and as expected, interest rate stayed at the same level of 5.5%. But we will definitely take a look at the technical picture of the New Zealand dollar later on. During the New York session, we got one more important event in form of the ADP Nonfarm employment change. This event is scheduled for release at 2:15. 3:45. There is another data scheduled for release, global services PMI from the US at 4:00 p.m. There's non-manufacturing PMI data from the US as well, and 30 minutes later, 4:30, crude oil inventories data are scheduled for a release. So as you can see, pretty intense day in terms of the data releases from the US later on. But now let's just simply jump to the New Zealand dollar technical picture. This is the 4-hour chart of the New Zealand dollar, and we can clearly see this market is heading towards the key technical support. So the key technical support is located here. This is the technical support from the September 2023. So if we simply just make this line a little bit thinner, there you go. You can see that this level is located at 5,855. On the other hand, of course, this is the technical resistance. It's far away. We just reverse from this level, so 6,043 pips, and now this very sharp decline to the downside has happened. Very big pin bar here with the potential low of this pin bar and the intraday support located at 5,866. Nevertheless, we are still heading lower. As you can see, the movement to the downside was initiated during the extremely overbought market conditions on the 4-hour chart, which is why there is still a room to the downside, and there is still a room here on the chart for the market to go lower. So we should see pretty intense movement to the downside very soon. So this is the situation on the New Zealand dollar. I'm just wondering whether we should switch to the daily to see whether there is some kind of other technical support for the New Zealand dollar. I don't think so. No, this is a daily time frame chart, and as you can see, if we break below this low here, 5,854, the New Zealand dollar will hit the yearly low. As you can see on the daily time frame chart, momentum is negative, reversed sharply from the level of 58. Now it's 40. So the market conditions are clearly negative, and this market is under the control of the bears. So the supply is right now the king of the New Zealand dollar market. New Zealand dollar is being sold all over the board, and the US dollar is being bought back up. So that's the New Zealand dollar. Because there's plenty of the data from the US, let's find out what is gold doing. Now let me just play with my chart a little bit. I think that 4-hour chart of the gold might be enough, but to see the scale of the recent sale off, it's better to see the daily time frame chart. So what is going on here on the gold? Well, the thing is that after this very big pin bar made just at the level of 1,946, we got this big sell off into the extremely oversold market conditions. So right now, this level here at 1,884 will act as a technical resistance, and the level of 1,892 will be the second technical resistance. So we have the supply zone where we are heading then on the gold. The next target is located obviously at 1,804. So this is the next target for bears, and of course we are heading towards this level because it looks like, despite the situation on the Momentum is, as I said, on the extremely oversold conditions. There is still a room little bit to the downside to for the gold, for the bears on gold to be to hit this level. Slightly higher, there might be slightly higher some sort of the level as well, but I don't think it changes much. 1,800 and $2, so that's not a big change. Nevertheless, as you can see, this is a big technical support. Any violation of this technical support will extend the down move pretty much towards even the level of 1,728, then 1,674, and eventually even towards the lows of the 2022 located at 1,616. All right, so please keep an eye on the current market developings. It's pretty obvious that we are going to hit this technical support. The question is how the market will react when this level is hit. And the other market we want to talk about is, of course, the S&P 500. Let me just play with my chart a little bit. There you go. This is a 5-minute chart. As you can see, yesterday the market has been moving lower, and we can see straight on this is the market that is under the bearish control right now. So for at least last 2-3 months, you can see from the lows of the October 2022 to the highs of the July 2023, this market was in some sort of the uptrend. Nevertheless, this time is moving way faster towards to the downside. We hit the technical support. The technical support is located at 4,195. This is important technical support. Again, it's been tested once, it's been tested twice, 3 times, and then there was a breakout. So the down move might complete here at this level, because the extremely oversold market conditions on a daily time frame chart might make it a little bit easier for bulls, and some sort of the bounce might be expected here. Nevertheless, please keep an eye on this market. Keep an eye how this market how the market will play this level, because it's crucial level right now for the bulls. Now, the technical resistance is obviously located at 4,333. This is the key technical resistance to the downside. There is one more technical resistance, obviously located at the highs from the from the 1st of the September 2023 at 4,539. So as you can see, 1, 2, 3, 4, 5 waves down was made here. This looks pretty much impulsive as well, so maybe the pattern that we are following here, let me just find my ABC patterns so I can make it for you guys. So maybe this corrective pattern here is just the ABC, right? It's just the ABC to the downside, maybe, just maybe. Then we have the very nice zigzag corrective cycle, and we are ready to go higher. Nevertheless, any extension lower, any breakout, sustained breakout, strong breakout lower below 4,207 would definitely question this correction to the downside, and would extend the drop even towards the 3,809. So please keep an eye on the current market development on the S&P 500 as well, especially in the context of today's very important data releases during the New York session. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.